How to navigate in the current markets, and how do the ultra-rich actually invest? To talk more on this, we have here with us Ashish Shanker, who's the MD and CEO of Motilal Oswal Private Wealth. Hello, Ashish.
Hi, good to be on your show.
Thank you for joining us today.
Pleasure.
Ashish, I want to start by asking you that what's your market outlook in the current volatility?
Right.
And do you see this is the right time to buy on dip strategy, or do you see further corrections happening in the year?
Right. So this is the time of the year where we go into reflection and we analyze what's happened in the previous year and then come out with our outlook for the calendar year. So last year we had said it's the year of the all-rounder, and we had stuck our neck out and said, look, you need to own all asset classes, equities, US, gold, and debt as well. And the view played out very well. If you look at the performance of gold was better than at least the broader index in equities, Indian equity. US also did extremely well, and debt also did reasonably well as interest rates softened a bit. This year, going into 2025, right, giving an outlook is a bit more challenging because there are a lot of uncertainties on the horizon, especially in the first half. So the US election is behind us, but the swearing in is happening later this month, and already media is very active with many issues around the new presidency. So we'll have to see how US reacts in the new scheme of things. Similarly, China, which is also a factor to keep note of because it's the second largest, they're in a slowdown. They're trying to again pump prime their economy. And in India, last 3-4 years in equities have been phenomenal. I mean, the index doesn't tell you the truth. Last year, Nifty was up 8-9%, but portfolios have been up 40-45%. So people are big time in the money. Now, as a natural consequence of that, what has happened is certain pockets of the market, excesses have built up and, valuations are rich. So hence what we are advising people is that, any incremental money, or even if portfolio, if it's too skewed towards small and mid caps, maybe you want to shift towards the larger cap portfolios through mutual funds or whatever is your chosen vehicle of investing in equities. Second, any fresh money, we are telling our clients that you may want to stagger the inflows into equities, right? Because you are going into a period of volatility. And remember, other than the global macros, even India is witnessing a slowdown. The last GDP print came in at much lower than expected values. Capex expenditure by the government has been slow. And earnings growth has slowed down for at least the large cap Nifty companies, right? So these are the headwinds. While we continue to be bullish on the medium term story of India, and I think we are in a good cycle, but near term you could see volatility. Okay. Hence, fresh money should go staggered. Preference towards funds or managers who have more flexi cap kind of mandates, and possibly with a bias towards large caps, because they have relatively done very poorly to the smaller and medium sized counterparts. And I do believe India has to do well. The larger companies also have to do well. It cannot only be the small and mid cap companies.
So what are the current risks in various asset classes?
So gold, we continue to be positive because there is a lot of central bank buying. The only thing is gold has done very well in the last 3 years, right? So I think returns from gold could be subdued, but gold is an asset class which acts as a hedge against any risk. So if there is any geopolitical risk, or if there is any global challenges that emerge, then gold tends to keep value. So that's why gold is a must in the portfolio, but expectations should be a little muted. Similarly, equities, I think your expectation should be muted this year. If you get a double-digit return, you should be happy about it, because you can't have every year giving 40-50% kind of returns. So I think if I talk about challenges across asset classes, the challenge is expectations, nothing else. So people need to start moderating their expectations.
And what are your budget expectations, and how do you think that will affect the market?
It's that time of the year. Budget's round the corner. Many things are outside the budget now, right? There's very little leeway within the budget.
Yeah.
I think if the government, what I'd like to see is a more aggressive stance from the government because the numbers tell you there is a slowdown in the economy. Consumption has slowed down. The capital expenditure by the government has also been much slower than expected. So we'd like to see a more aggressive budget to spur demand, right? That is my requirement. I mean, the usual stuff on around taxes, etc., keep coming up, but I believe that even if the taxes are kept at the same level, I would be happy as long as they don't go up. But would like to see a more aggressive stance to spur consumption, especially on the expenditure side. Because what the government has done is they've run a very tight rope on the fisc, right? I believe that whilst hitting the fiscal deficit number is important, but if you give a reprieve for a year and let's say, you increase revenue as well as capex expenditure and put more money in the hands of people, more directed cash flows, that could help spur consumption and hopefully capex should pick up because capex is a function of consumption.
Yeah. Which are the sectors and asset classes or themes which you would be looking out for this year? Like, you will, the sunrise probably.
Yeah. So let me answer it in two parts, right? The longer themes of this bull market are very clear to us, right? They are real estate, capital goods, manufacturing, especially electronic manufacturing services, defense manufacturing, utilities, electricity. But in the near term, I think you will see interest returning back to sectors like IT, sectors like pharma, especially with the rupee depreciating. And you could also see select staple consumption stocks doing well. So essentially, you will see in the first 6 months maybe sectors which haven't done well in the last 1 or 2 years coming back.
Okay.
But the longer term trend is very, very clear. So if you want to hedge your portfolio and in the near term you want to protect your equity portfolio, maybe an IT is something that I clearly see as a emerging theme.
What have been the top investments of HNIs in other countries?
See, I think the kind of equity returns that India has seen, the only other country I can think of is US. Right, US has done extremely well, and a large part of US household savings is in equities, right? So US and India have been really at the forefront of delivering equity returns. Otherwise, if you look at other countries, I think debt is also a preferred asset class, and what we are seeing is gold has been gold buying by central banks has been going up. The other asset class which we do not cover because our knowledge is very limited, which has done extremely well, is Bitcoin.
Yeah.
Right, especially with Trump coming back as president and a lot of noise around Bitcoin by his advisor Elon Musk. I think Bitcoin has done well, but frankly our knowledge on Bitcoin is very, very limited.
And also the regulations in India.
Regulations. The other big trend we've seen is investments in private equity, essentially alternative investments. That's a huge trend, and that trend we are beginning to witness in India now amongst ultra HNI and family offices.
Now coming on to India, so where do the HNIs invest here versus the retail investors?
So obviously we are seeing preference towards equity as an asset class across portfolios, right? Because debt funds has become unattractive from a taxation point of view. The second trend we are seeing, as the size of the portfolios become larger, and let's say they trend towards becoming, let's say, ultra HNIs, you see more interest in alternative investments. When I say alternative investments, we are talking about private credit funds.
Category 2.
Category 2. These are funds which are geared to deliver anywhere between 14 to 18% depending on the type of strategy. Then a lot of interest in private unlisted companies because people want to get in early. But these days IPOs are getting subscribed 200 times, 300 times. But people want to get in early so that when the IPO happens, they can enjoy a pop. I mean, we saw it in Swiggy. People are happy. However, on this, I would also like to caution investors that, look, it's not as hunky-dory as it looks because a lot of these unlisted securities get traded at absurd valuations. So, unless it's a discovered, name, like an NSE or a Swiggy was, right? Be wary of valuations, and ask the right questions, and then decide whether you want to put in money. But I see a lot of euphoria around it, and it might also come back to hurt investors if
Even
they
the
do not.
retail investors.
Yeah, I'm talking retail as well.
Okay.
It might come back to hurt them if they do not do their homework and due diligence. Yeah.
And any particular trends in retail side you're seeing which are similar or different from?
I think the biggest trend is SIPs. I mean,
Yeah.
SIPs into small and mid cap funds. 80% of the SIPs are going into small and mid. That's the biggest trend I see, which is actually a healthy trend, because if I have to advise anybody to put money into equities, especially small and mid caps, my first advice to any household would be do it through SIPs.
Yeah.
So it's a heartening trend. I mean, you've gone from 8,000 crores a month 4-5 years back to about 25,000-26,000 crores. I just hope that if things become volatile, right, and returns could get flatlined for 2-3 years even in SIPs, people continue to stick to it, because over longer run it's proven to be a winning way of investing into equities, especially small and mid. Yeah.
And what's your advice to the young investors right now, both of HNIs or the retailers?
I think my advice would be believe in the India story. I think the best is yet to come. We've just started on our journey, and we are a young country. So you're seeing companies being created by people in their 20s.
Yeah.
And I think future is going to be far more exciting. So first is have that unshakable belief in India, Indian entrepreneur economy like we have. And equities is the best way to create wealth for all these youngsters over the longer period of time. But try and understand where you're investing, what you're investing, do your basic work. Because I know a lot of people are now, the younger people are tech oriented, they get a lot of
apps are there,
content on apps, and they just invest based on certain recommendations, etc. I'm saying try and do your homework on your own, because unlike 15-20 years back, or when I started my career, data is abundant today. It's available on a fingertip. Right? The kind of data you can get on companies, the kind of data you can get on asset classes is amazing. So you have it on your fingertips, whatever you want to read, whatever you want to see. There is so much content. So do your homework, but believe in the India story. I think the best is yet to come ahead.
Okay. Yeah. And also there's one report we were reading about the migration of the wealthy from India. So, how do you see this? How do you view this? That is it actually happening, and what is your view on the whole situation?
So, yes, I mean, there is migration happening, and people who created wealth, especially what I see is amongst the slightly younger generation, who come into money quickly because they've sold their company or they've divested a stake. They want a better quality of life, right? So, and today there are a lot of immigration programs by other countries. They're trying to woo millionaires. So, yes, some of them are going. But the healthy trend is a lot of people are coming back also because of the ecosystem. So if you look at cities like Bangalore, Hyderabad, Pune, Gurgaon, these are tech hubs, right? So I meet so many people who used to work in US and have now come back to set up their own company in India and have got funding. So, I see both, and I think it should not be a worry. I mean, yes, some people may go out because they want to enjoy their wealth, but I also see a lot of people, coming back because there is a lot of interesting work happening in India right now. And other than US, I think India is the only market which has rewarded stakeholders.
And across sectors, the growth is being witnessed.
Across sectors, absolutely.
Okay. All right. Thank you for those insights,
Thank
Ashish.
you very much.
Thank you.
Pleasure speaking to you.
Pleasure. Thank you.
If you like the video, do like, comment, share and subscribe.